Is it possible to buy a home with 0% down payment? The answer is more complicated than you think. Let's do it up, everybody. So, I get this question a lot. Is it possible to get a mortgage to buy a home with not a lot of down payment, or let's say zero down payment? Let's take a look at the math soon, okay, guys? But first of all, you will not be able to qualify with AAA lenders because AAA lenders must have down payment sources from a own your own money. So they call it sweat equity or own source of funds in terms of cash or liquid assets like RSP that you can sell. So now let's take a look at some of the math of some alternate private or B lenders. First of all, they're going to have a higher interest rate of 1 to 3% over the rate you can get with an A lender. And let's go. Let's take a look at the math here. So this is for a regular purchase here. Let's say, for a $500,000 home, someone had $50,000 down payment. That's 10% down at $130,000 income. And let's say this is, cash from yourself, sweat equity. So this is going to be under 39% gross debt service ratio. So the mortgage will be approved according to this chart here. However, what if you have no down payment? So if you delete this, you see all of a sudden the GDS don't qualify anymore because you need a bigger mortgage, right? So let's add this again. You see here the mortgage loan amount. As you delete this, we make this 0. Now it's going to be $500,000. So because you're borrowing more, you have more monthly payments, and then your GDS is messed up. Okay, and not only that, you're also going to have to you still have to make the down payment actually, but how it really works is you have to get another loan to put the down payment. So let's say this $50,000, we're going to get it at 9% from a line of credit, let's say. And let's say you only want to pay interest on that for now. So your monthly interest is 375 a month at 9%, which is a pretty fair rate these days, considering interest rates are pretty high. 375. Okay, let me add this here. 375. So you see here, every month you are paying 375 as well. So your TDS is now 44%. So would you be qualified? Well, private lenders and B lenders sometimes have more relaxed debt service ratios. Usually it's 39.44 for A lenders. And for B lenders, we've even seen as high as 55% for GDS and TDS. So yes, it is an option to have zero down payment or borrow your down payment. They also call it down payment from borrowed funds, which is acceptable to some mortgage lenders. But if you see it from the perspective of the lender, it's riskier, so they're going to charge you a higher interest rate. However, if you really just don't have down payment available, this is your only choice. And the pro is that you get to buy a property now. The con is that you're going to be paying a higher interest rate on both the mortgage and uh, your borrowed funds. You're going to be paying interest on that as well. And one more thing to note is that even though you don't have down payment, you still need income. Okay, you can't have no income or down payment. There's also one mortgage product which I'll talk about in another video. It's called net worth mortgage. You guys can look at that. Um, you can look up the Scotiabank total net worth. So if you have a lot of net worth and you don't want to use it as down payment and you don't have that much income, you might be able to use your net worth to qualify for a mortgage. And that wouldn't be triple A. It would have a higher interest rate as well because it's unconventional and a little riskier in the eyes of the lender. So if you guys have any questions about anything related to this topic, please let me know. My contact information is uh, in the screen right after this. And have a great day, everybody.